right, Gary. So yesterday we were talking on a live and you said something that I found pretty interesting. You said you had to learn to unknow. You talked about kind of an S curve of knowledge and how when you get into a new field, you kind of have to teach yourself to forget almost. So I wanted you to dive in on that and what that actually means.
Well, it's a little bit like when I talk about when you're starting your career, to identify those things. To me, the thing to identify first, or if you're starting a business, like when I go in and buy a company or invest in a company, one of the very first questions I ask people in their business or in their career, hey, what are we not doing? And it's a weird way for me to kind of like back into, hey, let's agree on what we're not doing. Get rid of everything that you don't want in your career. For me, I didn't want to be an accountant. I didn't want to be a secretary or an administrator. I didn't want to be a salesman and sell cars or pharmaceutical drugs. I knew I did not want to do that. So once I got a whole list of things that I didn't want to do, once a business gets a list of a whole things they don't do, then we never have to confront when somebody pops up with an idea, hey, let's go do this over here. We can make some quick money. So what I mean by unlearning, I mean, first, acknowledge what you think you know about what baggage am I bringing to a new market. I bring a lot of baggage, thoughts, constructs. What are constructs? Constructs are agreements that I have made inside my mind or with someone else or other entities. And we have this agreement and it's built on some principles. These principles are human being principles. They're not set in stone. They can change. So when I go into a new marketplace, I'm trying to figure out what baggage do I have that actually colors makes me bias. Either, hey, this can't possibly work, or, oh, wow, this is going to absolutely work but I'm using the wrong metrics, right? I'm using some analogy that doesn't really hold true. Here would be a very good example. I spent about 4 years investigating the payments industry, spent a year in London by myself doing business development, like in what I call intelligence work. I think being a salesman or being a business development person, probably the best analogy behind a great business development person is an intelligence officer. He goes out, that's my job. I go out, I look at a marketplace, I identify all the players and try to assess the condition of that market, and is there a big gap in it somewhere? I then look at the gap. In this case, it was chargebacks. I was in London, talked to a man that had been in the credit card industry for 30 years. I met with him 5 times. He told me that unequivocally, he worked for First Data. He told me unequivocally 5 times, no one will ever, nor have they ever made money on this chargeback problem. And the more he told it to me, the more I realized he had become so accustomed over 10, 15, 20, 30 years, this chargeback problem started growing just like a weed. This industry began to accept this as in fact, they used the term. The term was, this is simply a cost of doing business. And when I hear this rationale, it's simply a cost of doing business. It's usually the guy that says it is making money from it. And the guy it's costing is literally costing a tremendous amount of money. He has no way to solve the problem. So every time I hear this, it's just a cost of doing business. I looked at that and went, there must be a way to solve this problem. So I use, for instance, when I went in the credit card industry, I used my energy background to understand, look, we don't have any chargebacks or refunds in energy. Why? If it can happen on energy, which is, I think, more important than a credit card transaction, buying a bag of potato chips, I think there's a way to do this where you don't have so much fraud in the payment system. I was trying to introduce more efficiency. It's clear to me the credit card industry doesn't like efficiency because they get to charge every time there's a decline, refund, chargeback. There's a whole compensation program plugged into that. So the S curve, when you're trying to disrupt a marketplace or go into a market that is developing, you have to know how long it's going to take. And this S curve the S curve looks like this, right? You go long time, not making any progress. And then all of a sudden you jump up here. Okay, I'm trying to get in route here. I want to get in here. Okay, I want to build a business here. I see a lot of people that want to be first and build this business. What if this takes 7 years? Okay, these markets are hard to break down once they're all like glued in, and they have their Bank of America's done a deal with another bank, and ExxonMobil's done a deal, and the government's done a deal with the oil producers. I mean, these are deals that like their whole industries that have it's like fabric, man. All the players have stitched together fabric, right? So this is like Node 40, the business I'm in right now. There were about, I don't know, 10 players that came in here. They raised money at stupid values. They're not making any money. Coming into a market when it's getting ready to adopt. That's why I like getting into Bitcoin when I got into it. I didn't need to get into it at $30. I think getting into it at $60, 60,000 is better because we have more players. We have a better defined environment. We're moving up the S curve. We're beginning to accept change. Okay. Like it's too late to invest here. Like I don't want to be here. And I do not want to be way too early. Okay. Like, and I can come up with 1,000 stories of companies that were too early. AOL, Yahoo. Like we could go down the list, man. IBM has a monster position. Where are they? Right? They've been really early. I mean, they're beyond early. Okay. They're just a mature business in another age, and they're really struggling. This S curve, by the way, is very difficult for legacy players to deal with. Okay, because what are they doing? They're holding on right here. In this is where Bitcoin is right now. Okay, so they're literally holding on. They're kind of like maybe placing some bets in this future, but they're really trying to protect their old business. They literally have such a big problem. They would love to jump into the new world of digital, but in order to do so, they're going to lose all of this. They're going to have to put their best people on the future and leave their mediocre people on the past, which is where they're making all their money. And all of these companies are public. All of these companies have to show quarterly earnings. And if they don't, it's going to be very difficult to explain to a bunch of 22 analysts why your margins are going down every quarter. And then you have these other companies that have very little baggage. They're private, and they can take risk. They can take chances. They can implement technology that's not legacy technology that's been, what's the word for it? Bolted and pinned together, glued together, stamped together over 30 years. The significance of this development of digitization of planet Earth, no one is prepared for this. I just had a meeting with Kathy Woods at ARK Invest, and we both just looked at each other and went, 40 years after the deregulation of energy, those companies are still just catching up. Okay, there are so many opportunities. So imagine 30, 40 years after the energy complex was disrupted, it's still adjusting. How long is this S curve going to last? I think it's a 20-year run. I think this is a 20-year run. You could build multitudes of businesses, make a multitude of investments. And I personally think if you're right, if my thesis is right, it will be the greatest investment thesis in the history of mankind. Like we have the ability to actually get in on nearly ground zero without wearing all that time. Okay, this stuff coming in 20 years ago or 10 years ago and buying Bitcoin and then moving that Bitcoin into building businesses, and those businesses didn't produce any income. You couldn't get an exit. I think at the end of the day, Sam, you got to know when is the optimal time to go in. I think you can be too early, and I think you can be too late. So being right on time is good. Being right on time is good. You do not need to be too early. You need to be smart is what you need to be. And I think staying in your lane in these businesses, one thing I'm going to predict, there are too many companies trying to do too many things. Like they're trying to be everything to everyone, or they're trying to generate short-term revenue. they get off their posts because their quarterly earnings, their private equity guy needs them to generate some revenue instead of thinking a little bit longer out and going, look, we're building infrastructure here. It may take us a bit longer to make monster revenues, but I would rather make revenue. And that's the other thing me and Kathy and I were talking about. I said, Kathy, why is it that fintechs believe they can't make money? And she said, huh? I said, look, I believe after 3 years of being in a business, you start generating revenue, and then 2 years later, you start generating profits. I don't understand why these companies cannot generate new growth revenue that is sticky, it's retained, and it turns into profitability once you get scale. So that's all I'm trying to do, dude. Find businesses that I can scale, that have addressable markets that are so massive. This Node 40 business, guarantee you, dude, the opportunity here is so massive, 20 companies could form tomorrow morning and still not deal with the entire complex of the United States alone. Just to serve this treasury document that I posted earlier, 20 companies couldn't do this. And the amazing thing is, there's only 3 companies currently that are capable of doing it. Like 3 in the whole world. Node 40 is one of them. And I don't think any of the institutional players are capable of doing this. Not one. There's 43 accounting, tax, audit, forensic firms. I do not believe there's one out of the 43,000 that can handle this amount of data on scale. Accurately, efficiently, and profitably. Accurately, efficiently, and profitably. Where there's enough meat on the bone for everyone too. This does not have to be like an exploit. This is going to be the greatest risk management tool crypto's seen. And she picked it up very quickly. Oh, this isn't a tax tool. This is a risk management tool. So did their CFO too. This is what I've been saying. This is not a tax tool. It's easy to understand Node 40 as a tax tool. And sorry to go off on that, but the question you're asking me is, how do you know when? This is exactly the perfect time for a Node 40 because everything's coming together. The regulations are coming together. See, the S-curve is being built, right? We have a bunch of activity here. Nobody knows what's going on. IRS comes in. SEC comes in. We start doing all our ETFs and everything. Anyone that thinks that the United States is going to do anything but be positive on crypto, you're wrong, okay? The United States Treasury Department does not write a 365-page document, rules on dealer broker processing and granular reporting, and then want to ban it. No, they don't do that, okay? They have accepted crypto's here. It's here to stay, irrespective of Biden or Schmiden or the SEC. Crypto is here. The United States can either get behind it or not get behind it. We are very close now to being late. The United States, I am so excited about this election in November because if Trump wins, we're going full on digital. We will be the innovative country behind digital. If we stay with the administration we have, we're going to be slow and pokey. We're still going to be there, but we're just not going to be a major player in the digital space.